to talk about early stage ecosystem and to see how collaboratively we can all work to make this more exciting. What I'm going to touch upon is, with my investing background, just talk a little bit about what is this investment and fundraising all about, and talk a little bit from both perspectives, and then we can have we have a very interesting panel and we can take on some of the things over there in terms of actual experiences. So I'm quickly going to run through, why is it that entrepreneurs and investors need to come together? I mean, why does anybody really require funding when you're running a good business? What are the different reasons why you really need to get and ask for some money into your company? Obviously, it will be to enhance your product, to develop a new product, build a team, get your brand established. But really, when you're talking about investment, getting somebody to invest into your company, you really have to have one big mantra in your mind, is that an investor is going to come in for helping you scale the company, but not just scale the company. He's looking for non-linear growth. Really, this is where you need a quality investor who's going to give you non-linear growth. The famed hockey stick growth, as we are called, which would lead to market leadership and create value. There are various ways in which one can get investors to help with this growth. You can have your own personal funds, friends and family. Then there are these so-called angels who are also investors and will help you grow. And then there are institutional venture capitalists or private equity funds. In addition to these kind of investors, you can also have strategic investors, or the government funds who will help certain sectors. Of course, there's the IPO, and if nothing, you must have your own internal accruals, and which can also take you to the next level. An important point to note is that when I'm talking about investors, I'm really alluding to equity capital. So there is going to be somebody who will come into your company for a slice of your own company. So in effect, the entrepreneur is diluting at some valuation, and a founding team and the investors actually become partners. And believe it or not, they actually sit on the same same side of the table, not against each other. And your management, your strategic growth, your scaling, your exit plans, all will be affected when you get actually somebody to come into your company to invest. Another very important part of investing is, whether you're an entrepreneur or investor, you have to really understand where the company is, in what stage. So there is early stage, we call it pre-revenue, or very early proof of concept type companies with very early revenues, could be with losses. Then there is what we call the development stage, where proof of concept is done, there is an established revenue model. It could still be at a loss. And then there's later stage where it's an established company with profits. And typically investors come in at different stages, different types of investors come in. Very early stage, very pre-revenue, personal funds or angels. Then there are incubators and accelerators, and we'll talk something more about this in the panel. And then you have venture capitalists or institutional investors, and then at some stage you have go to public markets and so on. So this kind of shows where the revenue and investors, how they meet and at what point of the curve they meet. And the higher the revenue, the later the stage, and there are different factors which affect decision making at different levels. If we talk about an institutional investor like a venture capital fund, what they actually do is, venture capital funds have raised money from a bunch of investors, and the fund is actually going to invest that money into a whole bunch of companies. There could be startups, it could be little later stage. We ourselves, for example, invest in total startups. So you're taking somebody's money and putting into some, to work with somebody else's companies, and hopefully altogether it will be a win-win proposition. That's the basic theme of a venture capital fund. And how does this really work? What is the really investment criteria? We're looking at early stage companies, so they're small, they're growing, but how does one actually figure out as an entrepreneur, what is going to tick with this VC? How do I really understand what's going on and what is really the secret code, The first thing that really the VC looks for when you first meet is try to understand what is the idea, what's the concept. Is it unique? Is it innovative? Is it out of box? Is it proven? Most importantly, is it actually feasible? Because we get fantastic ideas. Many of them just are not, their execution is virtually impossible in the ecosystem that they may be targeting. So, really the question that we ask is, are you solving an important problem? And how are you solving it? Is it in a differentiated manner, or is it just another one of the Me Too